please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, amidst rising fuel prices and a falling rupee, the Prime Minister is likely to hold a crucial meeting this weekend to take stock of the economy. Soon after the news broke, the rupee recovered sharply in trade. At one point, it was close to the 73 mark against the dollar, but by the end of the day, it was back closer to the 72 mark, making its biggest single-day gain in over 3 months. Separately, the Union Cabinet today also announced a slew of measures to lift the rural economy. A new procurement policy to ensure MSP to farmers has been cleared, and the prices of ethanol have been hiked as well. 3 macroeconomic indicators offering hope for the government. Trade deficit in August has eased marginally, but it still remains elevated at over $17 billion. Retail inflation for August is below 4% for the first time in over 10 months, but many expect the rise in fuel prices to have a significant impact in the month of September. On to industrial production, steady for the month of July with a growth of 6.6%, but this is largely on account of a low base. In July last year, the IIP was at a mere 0.9%. So amidst this backdrop, as I pointed out, the Prime Minister is likely to hold a review of the economy. What can we expect? Should we expect any measures or not? We discussed that with our panel of eminent experts. Joining us is Surjit Bhalla, member of the Prime Minister's Economic Advisory Council; Pronab Sen, former principal advisor of the Planning Commission; Joshi, chief economist at Crisil; Chengal Reddy, chief advisor of the Consortium of Indian Farmers Associations. Gentlemen, appreciate you joining us here on the program. Surjit Bhalla, let me start by asking you, we've seen the rupee depreciate, and we've also seen a very swift and sharp recovery coming in this afternoon on the back of news that the Prime Minister was going to hold this review meeting. Now, we don't know whether measures will be announced or not. Obviously, the market is assuming that something will be announced. What those measures could be, I'll put that question to you. But do you believe that it is time now for intervention? Because our colleague Sapna Das is reporting top government officials telling her that it's time to hold our nerve, not the time to react in a panic fashion, either on the rupee or with respect to oil. So what would you expect at this point in time?
Yeah, let me first point out that whatever I say, it's my own personal view and not that of the PMEAC. The first point on the rupee is that it's part of a global sell-off of currencies. Neither developed country currencies nor developing countries' currencies have been spared in this global dollar strength. So I think that needs to be and should put some perspective on what is happening. The second part is that if you look at the annual report of the RBI, they state that they don't think, or matter of fact, let me quote it more or less accurately, that amongst the peer group, the Indian rupee appeared to be less overvalued than many of its peers. So if there is a fundamental reason for the rupee to be where it is, i.e. an overvaluation, it doesn't appear from anything that the RBI has said through its research notes or through its annual report, or anything that the Ministry of Finance has said, that they believe that the rupee is at 71, 72, 73 levels, somewhat over what they believe to be fair value.
Okay, so in that context then, do you expect intervention, or do you believe that given the fact that this is an emerging market phenomena, given the dollar strength, that the government and the Reserve Bank will perhaps wait it out for a bit longer? We did a poll this morning on CNBC TV18. We polled about 10 economists because there was this buzz on the street that if the rupee were to continue to depreciate, I mean, we were talking about 73 this morning, then the Reserve Bank may in fact be forced to act mid-policy. But our poll seemed to suggest that the 10 economists that we spoke to, 9 said they don't expect a mid-policy intervention. And the biggest macro concern that they had was the current account deficit, which is edging closer to 3%. Would you agree with that?
Well, let's look at the current account deficit, again, the fundamentals. Implicitly, what I think is behind most people's minds is what happened in 2013. And in 2013, India was about the worst currency in the world, depreciated by something like 28% over the 3 months or the 6 months of the taper tantrum. That's what people seem to have in mind. But you know, in 2013, the Indian economy, or inflation in India, for the previous 8 years had averaged something like 9%. This time, the inflation rate is something like 3 to 4%. The growth rate at that time was declining and low. The growth rate at this time is accelerating and high. So if you look at these two big fundamentals, and even if the current account deficit at that time, we were talking about 2.4% this time, it was close to 5%. So I don't know, quite honestly, where people get the notion that, listen, you know, the Indian rupee is subject to a devaluation like what happened in 2013. The fundamentals are radically different this time. The fundamentals for the economy are really strong, and suggest that this part of the global sell-off of emerging markets and other currencies, not forget emerging markets, even advanced economies, this is part of a global strength of the dollar.
Okay, so no one disputes the fact that the fundamentals are very different today from 2013. But let me bring Dr. Pronab Sen into the conversation as well. And let me focus on the rupee for just a little bit longer, Dr. Sen. Let me quote to you what the Economic Affairs Secretary has tweeted today, saying that there is no fundamental rationale for the rupee to depreciate to levels we saw till yesterday. It reflected overreaction of market operators. The government and the Reserve Bank will do everything to ensure that the rupee does not slide to unreasonable levels. Given this statement, one would imagine that the kind of fall that we saw today, specifically edging almost to 73, is what the government and the Reserve Bank consider as unreasonable.
Well, I don't think so. You know, by and large, I agree with what Surjit just said. There is no reason to panic, but the fact is that media has created panic. The fact is that the political system is making a massive issue out of it. So the government has to be seen to be doing something. And I think what the DEA secretary was doing was essentially what the Governor Reserve Bank should have been doing, which is talking the market up. That is, you don't do anything, but you make the right kind of noises. Now, that's how it should be. But I think the government will have to go beyond that. It will have, because it has to address the political issue. And hopefully what they will be doing are taking steps which will give a certain degree of confidence and bring some rationality back to the market, but without really disturbing the boat. And, you know, I would think...
So you're saying that essentially what we've seen today...
Yeah, so what you're seeing today is the government makes one noise.
Essentially talking up.
Yeah, so the government makes one noise.
We've seen the markets react to that.
Yeah, reacts to it. And that's a good strategy. Now, there are a couple of things, as I said, that you can do. Again, it's largely talking the market. There are some sort of advantages to be had. For instance, to say that GST refunds to exporters are going to get expedited. We're going to have a special window for them to get their refunds so that exports can grow strongly. That should take care of the current account deficit. Can say that, you know, we've already announced measures to improve farmers' incomes. So that should give a further demand boost to the economy. So we really shouldn't get terribly worried.
Okay, so those are some of the things that you believe the government can and perhaps must do to calm the markets. But Surjit Bhalla, you know, if we look at the past and we then talk about future action, if indeed the government and the Reserve Bank were to act, if the rupee starts to depreciate once again, I'm just looking at the previous measures that were taken, may decide to postpone or cancel import heavy capital, non-capital spending, you know, the foreign currency non-resident deposits in 2013 that was the Reserve Bank had offered. Could that be an idea? This has been bandied about for the last few weeks now. To your mind, what do you believe should be the measures as options the government could perhaps consider today?
No, I think what the government is doing is, I'm broadly in agreement with, they are sending the message that they believe that the fundamentals of the economy are really sound. They believe that the rupee level is not warranted, the current rupee level that we are seeing. And let's just look at the previous, and they have talked about or hinted that the FCNR, the foreign currency non-resident deposit bonds, are under consideration. Whether they are or not is not really or at issue over here. They are trying to communicate to the market that, listen, we are aware of what's going on, and very emphatically telling the market that this level of the rupee is not warranted by the Indian fundamentals or by the economy fundamentals. Indeed, if you look at Indian fundamentals today versus most other emerging markets, they are better. I mean, you saw the inflation number that came out today. That's at 3.7%. So I think, you know, speculators tend to, traders tend to overshoot. Markets tend to overshoot. It's the oldest known fact. So I think they are trying to tell the market that, listen, you know, we know that you're overshooting. And I think this was in the tweet that Mr. Garg said, that you may come to a sorry pass by the strength of the rupee later on down the line. You know, as far as the FCNR bonds are concerned, that's really an insurance policy, and there's only twice that we have taken recourse to that. One was just after the East Asian crisis in 97, 98. And at that time, mind you, the rupee was fundamentally, and Pronab will agree with me, everybody will agree with me, was vastly overvalued. And we took the right measures, you know, we depreciated the currency and did everything else. In 2013, the rupee needed a devaluation. It was heavily overvalued, as I just mentioned. Just look at the simplest indicator of excess inflation of India versus the US, since we're talking about the US dollar rupee relationship. And it looked like it needed. This time, you know, there isn't, I can't identify any fundamental causes. So that's what the government is trying to address and state that, listen, we don't see fundamentals. I like to have somebody point out what are the fundamentals that warrant this level. And if there aren't fundamentals that warrant this level, markets come back to their fundamental values after the traders and the speculators have had the day. Every market, whether it's a stock market, currency market, bond market, you name it.
Okay, so overshot on the rupee. Let me get in there. So,
go ahead.
Yeah, you want to communicate the market higher, which is what Dr. Sen said as well. But let me bring in DK Joshi into the conversation. Mr. Joshi, thanks very much for joining us. I want to go back to the point that both Surjit Bhalla as well as Dr. Sen made, and that links back to some of the decisions that have come in from the cabinet today, especially on new procurement policy as well as MSP and the measures taken on hiking ethanol prices. In the larger mix, the measures that were taken by the cabinet today, you know, what impact and implications will they have?
Well, I think as far as the MSP is concerned, I think if you look at the prices today, I think almost I think the bulk of the crops are below the new MSP that has been announced. So I think we in a way have a situation of glut, and you are trying to push the prices up becomes a little difficult. But I think that's the commitment that government has made, that they will they've raised the MSP, taken the first step. The second step is ensuring that the effective procurement takes place at that price. Now, I think that does push food inflation a little bit. Right now, I think the inflation is down today largely because of food. I mean, the high fuel prices, the currency weakening, I think they are yet to translate into generalized inflation, and core inflation also has started coming down. So I think if we raise MSP effectively, I think then it will definitely have an impact on food inflation. It may not take the overall inflation beyond the central bank's projections, but I think it definitely from these levels it will go up.
Okay, let me then ask the three of you, and I'll start by asking you, Mr. Joshi, in terms of how you see the Reserve Bank responding. As I pointed out, our poll suggested that no mid-policy action is warranted or in fact expected. So come October, what do you expect in terms of the RBI response on rates?
Well, I expect the central bank to be on hold, and they'll continue with the neutral policy stance, and I don't think they will take any action. Because I think the inflation is somewhat lower right now. So I think they would like to look for more data. And I think policy these days is more data-driven, and core inflation has also started coming down. So I think on hold is what I expect them to do.
Dr. Sen, as the chief of our Citizens Monetary Policy Committee, let me ask you, so do you expect hold, or do you expect at least another 25 basis point hike?
No, at the moment, I think the sensible thing to do is to hold, because the point that Surjit made is a valuable one, which is that, there is a tendency for traders and speculators to overreact. And if they have a feeling that, get the feeling that the RBI is committed to holding a particular level of the rupee-dollar exchange rate, then you can actually see a move against the currency. And that would be bad news. So at this point in time, I think hold is the right policy to say that we are not particularly worried. We'll manage the volatility, and then we will see what transpires in October.
Okay, so hold coming in from our chief of the Citizens Monetary Policy as well. Surjit Bhalla, over to you.
Well, I'll just comment on the inflation side, what Mr. Joshi said. One fact about Indian inflation, and this goes back to the last 4 years, that the RBI and most experts have systematically overestimated inflation.
Got it wrong.
Including the RBI. And so therefore, this idea, I just want to warn Mr. Joshi, it'll definitely go up. I just think one has to be a little humble and less firm in one's conclusions about inflation. Take, for example, the RBI had stated in August that they expected July, August, and September inflation to come in at something like 4.4, 4.5%, or 4.6%. And, the 2 months, the average is 4%. So, most of us can't get a very short-term forecast of inflation right, including experts. So, and again, on the MSP, it was announced, rice and wheat are the two crops that the procurement policy is in place. Rice price was raised by something like 12% and has hardly made a dent in the market. So to think that procurement prices are all that determines the price level is, I think, a bit naive.
Okay, so we've got it wrong in the past, as is the Reserve Bank of India on inflation. So be cautious. That's the message there from Surjit Bhalla. But let me get in Chengal Reddy as well. Mr. Chengal Reddy, I wanted to get your comments on the measures announced by the Cabinet today, specifically on the procurement, the private procurement stockist scheme for the new MSP mechanism, which will now be rolled out as a pilot scheme across 8 different districts. What's your sense on the measures announced by the Cabinet and how impactful they could be?
In the past 4 years, there was virtually during Modi's government, there was no problem in regard to production. By and large, production has been satisfactory.
Sure.
And food inflation was also at a very low level. But what Mr. Modi, the Modi government has to understand is that, as one of our colleagues was telling, there is most of the prices are at less than MSP, almost every price, every commodity, especially in regard to groundnut, cotton, pulses. You see, most of these products, there is no procurement system. Even though recently they did announce this increase in rice and wheat, except for Punjab, Andhra, and then Chhattisgarh, Jharkhand, rest of the states, there is no procurement in place. See, you have to look at farming in totally a different manner. See, this day-to-day inflations and all that for us farmers makes no difference. See, the problem which Mr. Modi must understand is, in 4 years, his NDA government has not able to salvage majority of the farmers' issues. See, there was hardly any improvement in question of productivity. which normally comes with the technology, mechanization, water and all that. Then, of course, the other thing is, you see, Mr. Modi wants to double the farmer's income. If he really wants to double the income, two, three things are there readily in place, which can take just a week to decide. Now, the first thing is,
no, but
link the Manrega with farming activity.
Specifically.
No, 1 second, ma'am.
No, I know you. You've made that pitch.
The circles of one day daily. No. You see, try to understand.
Go ahead, sir.
You see, like industry, like economy, like politician, we may not have voice. But what you people must understand, most of these things will have serious implications during the elections, which Mr. Modi must keep track of. The other things, they just come and go. But we are the people who are going to decide in elections what to do, what not to do. Therefore, this announcement which Mr. Modi has done today, perhaps it's only a very, very small one, but basically in the next 6 months, we expect Mr. Modi to take some drastic measures in regard to agriculture. One is, how are you going to reduce the cost of production, which is available with you? Reduce, in fact, your own manifesto, you said, you will reduce the cost of inputs, whether fertilizer, tractor, seed, or drip, you reduce it. The second thing is link Manrega, because you are already spending 70,000-80,000 crores without any productivity. You increase it and link it with the marketing. I mean, with the processing, it will come down. I'll tell you one example. In every sugar factory, for every farmer, they require at least 10 to 12,000 rupees for labor charge. Now, today it's going up and more and more. Just hand it over to the sugar factory, link the labor with sugar cane operations. You are about every sugar cane farmer will save a minimum 5,000-6,000 rupees every acre. See, there are small measures, but the whole problem at the national level is there are very few people to understand the dynamics of agriculture, nitty-gritties of agriculture, and therefore, day after day, Mr. Modi or earlier also, they were making a lot of suggestions, this and that, but at the end of the day, farmers are very well,
so you're
very
saying,
highly disappointed.
Okay, so you're saying the measures announced today not meaningful. I'm saying you're saying the measures announced today are not going to be very meaningful. All right. Unfortunately, sir, we're running out of time. Mr. Chengal Reddy, we're running out of time, sir, so I will have to interrupt you. Apologies for that. But let me go back across and get final wrap-up comments from each of our panelists. Surjit Bhalla, let me start by talking to you about what we should then expect at the end of this review meeting that's been called by...
Without agriculture, whether the economy can stabilize and grow, that's the question you have to put to them. Not the Reserve Bank fundamentals, not the market reactions. Tell all these economists whether without stable agriculture, Indian economy can grow at all. Please ask them.
I don't think that they will argue against that. They won't argue against that.
Economists.
Okay, Surjit Bhalla, if you could respond very quickly to the argument made there by Chengal Reddy, and also, as I pointed out, the review meeting that the Prime Minister is holding over the weekend. Do you expect, or would you like to see some measures, or do you believe that talk for now is good enough?
Well, I think, the authorities have got it under control. I think foreign exchange management in India, ever since 1993, I've never found any flaw with that foreign exchange management. I've had other problems with the RBI, but never about foreign exchange management, and I think they'll do the right thing.
Okay. Dr. Sen?
Well, the point that Mr. Chengal Reddy is making is extremely valid. I mean, we need to be aware of one very simple fact, which is unless rural India starts growing strongly again, not in terms of production, it's done about as well as it could, but in terms of incomes, we are going to be missing the single most important leg of our great growth story. And I think in order to bring back confidence to the growth story, I think measures will have to be taken to begin with agriculture, but the rural economy at large. So I think, the government has to take it seriously. At the moment, I'm not sure what and how much they can do, because there is a lot of institutional development that has to come in to implement much of what Mr. Chengal Reddy has been talking about. It's not going to happen overnight, but at least a start can be made. It may not have an impact immediately, but at least there would be hope.
And measures, do you expect anything at the end of this weekend meeting, or do you believe that for now,
in fact, I hope that so far the government has been very measured in the response, and I think they should continue to be so. If at any point the government is seen to be panicking, that would send just the wrong message at the wrong time.
Okay, DK Joshi, I'll give you the final say. Would you concur? For now, the government should wait it out. This is an emerging market phenomena. Fundamentals are looking strong comparatively, and so no panic, knee-jerk reactions warranted.
I would agree with that, and I just want to remind that even in 2013, when the rupee had passed 68, actually, even with the poor fundamentals, it bounced back to 60 by March of 2014. So I think it does self-correct. I think the market participants take a differentiated view. Right now, it's a knee-jerk reaction because there's a bond market, there's a sell-off in the emerging markets, and what's happening as a result of that is that the current account deficit countries get hammered more. I mean, and just to add to that, I think it's the speed that is worry, and I think the focus of the central bank does intervene to control the speed, and I think that's the right thing to do right now.